Welcome. We're here today with Jess Fox from Haatch to learn a little bit about Haatch, its investment strategy and its portfolio. Welcome, Jess.
Thanks, great to be here.
So let's start at the top. It'd be great to understand a little bit about Haatch, its history, where you began and where you are now.
Absolutely. So Haatch was founded back in 2013 by Scott Weavers-Wright and Fred Sanoya. They set it up originally as a co-investment joint venture under the label Haatch Angel, and then launched it as Haatch Ventures in 2018. The fund is actually run by multi-exit entrepreneurs who have over $200 million worth of exits between them. And actually, over those 9 years, we've seen huge growth in our valuations and in the performance of the funds. And actually, Scott, I should have mentioned earlier, is actually he received an OBE earlier this year in recognition for the work he's done, not just at Haatch, but even before that, and kind of on the sides as well, that he's doing in terms of retail and technology entrepreneurship. And it's really important to get that recognition for both him and for us. For our EIS and SEIS funds, we're targeting a 10 times return for our investors. And we're already starting to see significant growth in valuations.
And so looking a little bit at that SEIS and EIS fund, what is your investment focus, your stage, your sector? What is it that you look for?
Yeah, so we're an award-winning pre-seed and seed fund manager. And we actually have a suite of funds to invest across everything from MVP, so minimum viable product, right through pre-seed, seed, Series A, and through to exit. Our core focus is digital transformation. By that, I mean using technologies to transform the industries that they're in. Digital is a key growth driver across many industries, which means that actually we're able to be broad in sectors, but we really focus on those most transformative businesses. And actually, as part of that, and something we announced just in September, was our partnership with British Business Bank as well, British Business Investments, a subsidiary of British Business Bank. And through their Regional Angels program, we've had a commitment of 10 million from them over the next 3 years to invest alongside our investors in every investment opportunity.
And so is that like a co-investment vehicle where you invest and then they match your funding? How does that work? So
they're investing alongside our investors. So for example, for our SEIS fund, it's often easiest to explain through this, is every check that we do, they put 60k in as well alongside our investors. So suddenly that means that under the current rules, it's 150k check, but plus that BBI money is 210. But actually, we've just launched the UK's first SEIS fund under the new rules from following the mini budget that got announced. And we're going to be investing that 250. But also plus the BBI money. So that's 310k now going into each company, which actually is transformational for those businesses at such an early stage.
So looking at the stages that you focus on, that pre-seed and seed in particular of those different stages you mentioned, there are lots of funds out there. What is it that differentiates you? And I guess one way of putting this is, why would your portfolio say they chose Haatch?
It's a good question. In terms of, for us, I mean, most fund managers that you talk to will say that they support their portfolio companies. Of course they do. Of course we do as well. But what I would say is something that is very different about us and sets us apart from a lot of managers is the fact that we have entrepreneurs who have been there, they've grown, they've scaled, they've successfully exited from these businesses. So they really do know what it takes to succeed. And I think kind of that hands-on approach that we give is second to none. Having said that, though, the best kind of representation is really through our portfolio companies. What do they think of us? And we've had some recent reviews done. They were anonymous reviews. We can't tell which portfolio companies, but the words that they used were the support that we give, that we're always there, always hands-on, not just from a strategic perspective, but operational perspective, and having an extensive network that we can introduce them to, whether it's larger VCs or even kind of support within financial departments or marketing, things like that. We help in every aspect. And the other edge that we have actually is the fact that we don't charge our portfolio companies any fees. So the support that they get from us, we're not charging them any fees, taking away from kind of the investment that we're giving them, but actually that really is a competitive edge when it comes to other tax efficient funds, as a lot of funds out there do charge portfolio companies.
And so looking at your investors now, and we should probably take the SEIS and the EIS both on our platform in turn, How diversified do you expect their portfolios to be? How many deals a year?
Yeah, so we operate in tranches or funds. So for our SEIS fund, we look to invest in 10 to 15 portfolio companies. For the EIS fund, it's 4 to 6 companies. But actually across all the different funds that we have, we look to make about 30 investments on an annual basis.
4 to 6 in the EIS, it's more concentrated than other competitive EIS products. Why is it that you've chosen 4 to 6?
It's progressed from our SEIS fund, and we do have follow-on opportunities from that. They are the best performing SEIS companies, but equally we bring in new portfolio companies as well. So we see over 2,000 investment opportunities a year. We only make about 30 investments out of all of that. So to get kind of both the follow-on benefits and the brand new companies, it's the best of both worlds.
And you talked about your deal sourcing. You talked about that 2,000 companies. Deal sourcing is the lifeblood of a VC. What is it that you guys do differently? How do those 2,000 companies come to your doorstep?
Yeah, so over the last 9 years, we've really built up an extensive kind of relationships over the time. And we're now being sought out as an investor partner of choice, partly because of the support that we give our portfolio companies. We also have extensive relationships through our partner networks. We have it through our portfolio company referrals, which is a great source of business for us. Even our investor base actually is a fantastic source. We also work with angel platforms, incubators, accelerators, all the usual methods, but also we're very proactive in terms of sourcing our own good deals as well, not just all inbound. And that's really important for us.
Yeah, that makes total sense. And then when those deals come through the door, you're looking for something, key characteristics, right? What is it that you're looking for that makes an investment a Haatch investment?
Yeah, so again, like over time, we've really got a detailed investment process, and it's kind of started out as that we look at a lot and invest only in the best opportunities. I think team for us is a real core focus, particularly kind of the dynamics between co-founders. Kind of portfolio companies, they change, they pivot, they evolve over time. And yes, of course, we're going to look at the main metrics as well. But it's so important to look at that relationships between founders, but also with investors as well. It's a partnership at the end of the day. It's going to have to work over kind of a 5-10 year period potentially. So we want to make sure that it's at the core. I mean, at the end of the day, every deal goes through our partners and our investment committee. And we really have kind of 8 key pillars that we focus on. I mentioned team as one of the key focuses, but equally we also look at revenue focus, scalability, unit economics, things like that.
So looking at the EIS and the SEIS funds, since you started investing in 2018, how have they performed? And are there any investments that you're particularly excited about?
Yeah, so within the portfolio, obviously, we've got 54 companies, so there's a lot to be excited about. But starting on performance, with our EIS fund, we've had some really good, fantastic growth over the last 3 years since we founded. The first fund, for example, which actually the investments were made at the start of 2019, so just over 3 years old now. It's currently sat at 3.9 times money's invested, and is on track to reach that targeted 10 times return for our investors. But actually we've also got that consistently happening on a lot of our more maturing funds. So it's really exciting. But one example for you, and one of my favorite companies actually, is Aerocloud Systems. They're using artificial intelligence in airport management solutions. And they're really transforming kind of the aviation sector, basically kind of improving operational capabilities and efficiencies and profitability. And they set out to really challenge the market. And that's like Haatch, really. We're challenging the market out there. And for us, they're currently sat at 3 times monies that we invested in just under 2 years. But actually, they're currently raising their Series A round. So the sky's your limit, shall I say?
Yeah, and obviously one of the sides of venture are the failures. You know, we invest and we expect a load of failures. It's a high risk investment. Have you had any full write-downs yet? And if so, what have you learned about that?
Yeah, absolutely. I mean, it's part of the nature of investing in kind of SEIS, EIS. You're always going to have some failures. We've had 2 failures in our EIS funds so far. Both have been in the consumer sector, and an area we probably are investing less in, and focusing more on kind of SaaS and software, tech, etc., which is really where our expertise is in. Particularly with those companies, there's been a lot of high cash burn and product market fit issues, something that we've learned a lot from, and we always take with us, and every investment opportunity that comes in, we're always learning and progressing. But for us, kind of EIS, SEIS, you're always going to have losses. And for us, the focus is on kind of backing and doubling down on the winners in the portfolio.
Yeah, that makes total sense. So we're sitting here in the tail end of 2022, and 2021 was a pretty good year for venture capital. But since the beginning of 2022, the markets have been going down, interest rates going up around the world, the macro environment's changing. We've seen it change the later stage valuations in venture capital. But has it affected Haatch that much? Do you expect it to affect Haatch? What's it done to your valuations? How's it all playing out?
So as you rightly said, later stage, it's definitely had an effect, particularly in the main markets. And actually that has a knock-on effect for later stage funding. We do invest at an earlier stage of that, but obviously as our companies progress and kind of go through later stage funding, they will come up against it. Ultimately, at the end of the day, there's a lot of VC money out there still. And that's going to be for a good amount of time still. I think the key thing that they're looking for kind of at that later stage is really good revenue focus and good business progress. And without the key metrics, you're not going to get to those next stages and get that extra funding. So I think we're almost really focusing with our portfolio companies, making sure that they've got around 18 months now of cash runway and just kind of getting through this market shift.
So many of the investors on Further are looking at investing in venture capital for the first time. They may be sophisticated, but this is now a new asset class for them. With this in mind, why would you say someone should invest in venture capital, say, over other alternatives like the stock market or art or crypto?
Yeah, absolutely. I mean, there's lots of reasons to invest, but if I can maybe give you four. First of all, diversification, not just within a EIS or SEIS portfolio, but also within different asset classes. We mentioned earlier with the market volatility kind of we've seen in kind of later stage funding, actually the EIS and SEIS markets haven't seen it so much when it's early stage investing. So there's that benefit. Tax reliefs, obviously subject to personal individual circumstances, but the tax reliefs are there. You can get everything from kind of loss relief or income tax relief, but it's probably worth speaking to a tax advisor to kind of around your circumstances. The third one is the potential upside. So for investors that do well in kind of EIS, SEIS, kind of it's an untapped potential. As I mentioned earlier, kind of the return we got for one of our first exits was 276 times money's return. You don't get that many other places. So it's an exciting place to be. And I think lastly, it's supporting young companies and actually getting the excitement behind that. It's creating jobs. And at a time where the country really needs to see growth, the Chancellor in the mini budget recently kind of endorsed the EIS and SEIS opportunities because at the end of the day, we're investing in growth-focused companies.
And following on from that, when an investor is looking at other alternatives within venture capital, for example, crowdfunding or angel investing, what's really the difference there, and why would you say VC is perhaps a better alternative?
Yeah, I mean, kind of almost coming back to diversification actually is one of the things. Is the difference between a lot of crowdfunding and angel investing is through EIS or SEIS portfolios like ours, is you're getting a portfolio of companies. So there's kind of that risk mitigation. You're spreading and diversifying that. But equally with kind of crowdfunding and angel investing, kind of you've got to need a lot of time to be able to do the due diligence yourself. And actually at the end of the day, it's do you have that time to do the due diligence, but also help develop and support those portfolio companies? By investing in funds like us, you've got the investment team's expertise, the knowledge, the experience, kind of the due diligence that we do. We look at 2,000 companies, but actually invest in only 30 businesses. We have a lot of time to be able to look at all those companies and do the really good due diligence. For a lot of investors, it's just not appropriate to necessarily go into single companies.
To round up, in a quick line, why do you think an investor should invest in an EIS or an SEIS fund, and why in particular Haatch?
Yeah, so over the last 9 years, we have seen really good valuation growth and those first exits coming through. As well as that, we are proactive in our support that we give our portfolio companies, and we have that excellent network to support them to deliver for our investors. But actually, why now? And why should investors be looking at it for this tax year or next tax year is actually our SEIS fund. We've just launched the first SEIS fund under the new limits introduced by the Chancellor. So that means we can invest up to 250,000 per company. With the partnership with the British Business Investments, that means actually we can invest 310k versus the 150 previously. That is game changing for these companies. And it gives them the best chance of a successful start in kind of their entrepreneurial life. We're so excited by this opportunity. All I'm going to say is, as an investor, we invite you to be part of that now, and get in touch.
Brilliant. If you'd like to learn more about Haatch, then do read the fund page that you're on right now. And if you've got any questions, then use the live chat or the email function to get in touch with us. Thanks.